All right. Hey there, Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Friday, the 5th of January, 2023. And I've got Fibbo here with me today. He's going to talk to you guys through some charts. He's got some interesting timing stuff. He's looking at on Bitcoin that he's going to share with you guys as well. And then, of course, we're going to talk about the usual stuff that we talk about when Fibbo's here, gold, silver, all those kind of charts. Man, oh, man. But, real quick here, we had jobs data came out today. Unemployment was expected to be 3.8%. It was 3.7% last time. It came in at 3.7 again this time. So it came in better than expected. And we also had then the jobs number. So jobs were expected to only add about 170,000. And they're saying we added, 216,000. So, and as usual, those things are going to be revised at some point. I mean, they always are, right? But nonetheless, everything kind of came in strong this morning. DXY got a pop and then just started dropping back. But remember, DXY has already been rallying for a few days already this week. Bitcoin's been going kind of sideways. Again, guys, news is in the charts. And if Fibbo agrees with me on this, I'm sure. But other than that, we're going to talk about this. We're going to talk about, we're going to show you the charts and kind of explain what we think about, is it up only after the ETFs or not? Bitcoin ETF, they've got the January 10th deadline to either approve or kick it down the road again. So, man, it's coming up here, guys. It's coming up. But it seems like everything's leading to it happening. But, again, Fibbo and I aren't really about the news. We believe, again, the news is in the charts. So let's go ahead and bring him up there. What's going on, Mr. Fibbo Swanee? How you doing today, Brian?
Oh, doing well.
Doesn't he sound excited?
There's an ETF coming out? I didn't know about that.
Yeah, they keep saying it is. This guy, this Fink guy, it's some company that starts with a B, is all big about it. And JP Morgan was all about, crypto is the hell of everything. But hey, we want our slice now, gonna sneak it on in there. Coinbase, I mean, I've said it before, I'll say it again. Coinbase, I think, is the big winner out of all this. They're the ones that everybody's looking forward to do the, I believe it's the custody and whatnot. And so Coinbase has just, man,
rocketed.
I saw somebody tweet the other day. They were talking about, everybody kind of craps on Coinbase, right? But at the end of the day, they're the one exchange that has continued to remain, and they've done it with government regulation, here in the U.S., which is a pretty impressive. So, you can love to hate them all you want, but at the end of the day, man, I don't know if I'm buying stock and Bitcoin's going up. Coinbase is definitely the one I'm looking at. What do you think there, Mike?
I mean, I'm probably one that's called it Conbase probably my entire life. But then again, we're traders. If there's setups, if there's areas to have money be made, it doesn't really matter what it is. If it has a setup and a possibility of making some cha-ching, then you do it. But yeah, I mean, it is what it is. I think I haven't looked at Coinbase lately, but I think it's up more than Bitcoin is, percentage wise for the year, which is crazy.
Yeah, it's done extremely well. Of course, that was you remember it came out and Kramer was like, oh, Bitcoin, Coinbase is this great buy at like 400 or something. And then it just kept falling. And then he's like, oh, this is crap. I'm out. And now it's pretty close to the bottom and it went back up. It's just, I don't know, man. I like to get, the guy's been around for a long time and he's made a lot of money. And I like to give him the benefit of the doubt, but damn, every time he gets on TV now, says something about Bitcoin. He's like, it's like a normal, untrained retail traders kind of perspective where it's all emotional, right? He gets emotionally excited at the tops and gets emotionally down at the bottoms. And it's like, dude, this isn't good look for you going on there every time.
Yeah, it's almost like he's almost like a crypto Twitter influencer that wants clicks, and he just goes on his show just to get some clicks and some hype on
clickbait, right?
yeah, clickbait. I don't care what's going to happen. I just want clickbait.
Yeah, there you go. Right. Who else? Who's all here already? We see David's here. What's going on, man? The curator's here. Oh man, I'm going to probably screw this up. Salubrious Scratch. Oh my gosh, you tried me this morning, guys. Mr. Shinari, what's going on? Nevlusian, Soren's checking in. Alvin, what's up? Wazobia Dollars, one of my favorite people here as well. David Gelfin is here. Andrew Bennett. If you guys are in TWC, there's no way you can't know Andrew. I think you probably know him about as well as you know us. Who else is here? Corey, what's up, man? New Type Trader says Coinbase always shuts down when there's too much trading volume, though. I'd prefer Kraken over Coinbase if Kraken was on the NYSE. Yeah. And God, if you've been in for any number of years, these exchanges, they always seem to go down. When all that, when price really gets kind of crazy, whether it's up or down.
It's sort of like
with that. I've had my big issue with that for a long time because it seems like, hey, you're doing this professional service here. You're supposed to understand that there's going to be volume. You're supposed to be able to handle that. And here we are year after year after year dealing with the same damn thing, right?
Yeah, it's their form of limit down in the commodity world, right?
Yeah, there you go, right? It just knock it all out. You can't sign in. That's the limit down right there.
Yeah, shut it off.
Let me see here. Who else is here? Revy, Data, what's going on, guys? Let me see here. Alvin is saying the Bybit app is useless in high volatility. I don't know. I never used Bybit. What's going on, Jim? All right. So, hey, listen, guys. Fibbo's got some charts. Y'all ready to check these out? Let's see what he's got here, and we'll try to get this set up a little bit better for you.
Yeah, let's start rocking and rolling here. Really, I'll start on the 4 hour, but I want to get into some of the higher time frames to show some stuff. But what's happening in the near term? We had that movement to the downside the other day. Just rocketing down. Everybody's all the tombstones and gravestones come out. Bitcoin's dead. All that kind of stuff. But yeah, we had a move down. The first move down didn't click into the bear zone. It was the next candle that did. So we did click into the bear zone. This is a weird setup. This typically doesn't happen in my process here. But we've had this long move to the upside, and there's this previous shallow fib here set at 38,654. That's really my line in the sand at the moment. So even though this goes into the bear zone, it's really not triggering bearish just yet. It really has to get down below this level to really get me into a bearish mindset. Because the daily is still on the bull zone. So to me, all the action right now is in the near term, with really just some crazy volatility going back and forth. So as we're whipsawing here, there's just an area of indecision of people are just waiting for shit and waiting for ETF news or waiting for something to happen. But at this point in time, we did go into the bear zone. The way I approached it is I was actually 45% long, that's a weird number if people don't understand how I do things. But what I did was I took off 20% of that and took profit and left the other 25% on to have exposure to go to the upside because it's not below that previous shallow fib. So for me, as it goes into the bear zone, I want to respect that because in case this does end up going out, falling out of bed. So I took some profit, but I left some exposure because that previous shallow fib's still in play. So really on the 4 hour, that's really all that's going on. We're just kind of waiting for a new bull zone to add back in, or if it drops back down, the 200% extension on this is down there around 39.4. That would be an area that I would buy during the bear zone, and then stop it out if it gets back below that previous shallow fib with 3 4 hour candles consistently underneath that shallow fib. But right now that's a lot of ifs. We're just kind of whipsawing back and forth here. But as we move over into the daily is still sitting bull zone, looking pretty decent. The ADX is pretty low, and the directional indexes are all kind of tying up into a knot. So that to me is just more consolidation between this fib extension zone hit, which was right around 41K. It worked its way up a little bit higher, came back down and tested this whole area a few times, and has held support, which is a good thing. We want that to happen. And the shallow fib for this one's around that 38.5. If you got all the way back down to there, you'd want to be buying some more if the bull zone holds. But really the setup is still sideways to higher, and I still have that next target at 53K, and that 53 is interesting number as I look into some of these other longer time frames. So really for the daily, just holding my longs. I've been long, for this whole stretch. Did take one profit on one of them. I'm still long to where 53 is that next number I've been waiting for. I was hoping that we would get to the 48K first. Almost, I mean, it was trying to get there. Didn't quite get there before we sold back off. But given that this area consolidation is still holding, I like that support with higher potential. So here's the weekly, and there's some things on here that I wanted to highlight. One is this key long-term support that I marked, and this is that 41,302 area. And when you go back to the daily, that's that fib zone hit. Basically, I don't have it at 41.3 on here, but you can see the support comes in right around that area. So when I'm looking at this weekly, this number, this 41,302, comes from, different ways I look at things, but this could either be, I just wanted to take a trend-based extension off of this move to the upside to this high right here, and then it corrected back to this trend line. So when you take that mark, the 100% is 41,302, and then you had the 127, which was at 45.7, which basically hit the other day, or pretty daggone close to it. And then the 48K was at the top of that range, and that's been that area I've been waiting to see. But it fell a little short, but not that bad. But I'm marking this as key long-term support because one of the things I'm watching is that we had 3 settles above this line, which now keeps this as a nice, kind of hold of buying interest to where that upside target of this trend line break that I've been waiting for, which is the bottom is around 50. And then this line up here basically is that 53. So this green zone is what I've been kind of waiting for to get a nice little pop back up to there, see if that holds, and then bring us back down. But so far this is holding. You can look at it a couple of different ways. Like if you get into Elliott Wave, which you do, you could actually take it from this point here, and this could be like a little bit of a, like an ABC 2 in here, to where it comes in to be 44.90, which is relatively close to the 41K or so for that support. But I was just taking the high down to the low and just see what that next leg would be, just to kind of give it a measurement. But I like how it broke through and then is held that as that point right there at that 41. So when you look at it on here, it looks really nice on that hold on the daily with that target of 53, which comes from my fib levels of the 127, 141 was that 39 to 42K range, which definitely broke. And we had 3 settles above it, which makes this area support. And the 200% comes in at 53. So that target comes from just my processes from my fibs way back when. That's been going a while. And that 53K is sitting there pretty good. So I'm looking for that zone to be hit on this run to the upside, maybe before we start seeing a correction. Another thing on here is the RSI down here. When this was hitting this area in here, you can look at it like this if you want. As it was hitting the high here, and then we went up to the upside, got a little bit oversold or overbought here, came back down, but has not really broken back down below there, and we held support. So to me, this is kind of a bullish signal at that support point. So the more it comes down to there and more buying interest comes in, it'll help. It's kind of like a pressure cooker just underneath that level, because I think once we break that 45, 46K, it could launch up to 50K pretty fast. But right now we're in that range. We're going to watch it and see what happens. But that's what I'm kind of looking at on the weekly at that. So when you go over some of the other things I've been looking at, I've shown this before, and I really wanted to show this just to get the number that we're at. Basically, I was looking at these trend line breaks, and then once you had a trend line break and a retest, from that retest point to when it made a new high was 78 bars. Same thing here. This one didn't have a throwback to the line. It just broke out. So 78 bars from that point is when it broke to the upside. And then 78 bars for us would be above 69K later on next year, or this year now. Happy New Year. So we're getting, or basically post halving is really what I'm talking about, is when we get into a new high. But what I wanted to show on this was when these highs happened, if you extend it out to where the high could be, I got this green candle right here, comes in at 114,778 as a high possibility for the 2024 timeframe, and that comes in at the end of the year. The 69K break could come in around October. So that October, November, December could be kind of crazy if this pattern holds true and keeps us up to where we get up to that 53K, we come back, we hit 69K later on this year, post halving, and then beyond that, we can get up to that 100K, 114. But what I wanted to show this 114 for is when you throw up the annual, this one's kind of interesting because you had this move to the upside, and then you had a high into a low, and basically it's just a bar, or basically 1 year, and then it had 1, 2, and then 3 to where it makes a high, and then this one had the 1 year down. Then we had 1, 2, and then 3 to the high. We had one down. We had one up. This one was barely an up this past year, but now we have this move possibility to where that 114,778 could come in at the end of the year. So to me, we had that 1 year of correction, 3 years up, 1 year correction, 3 years up. We've had 2 years up. The 2023 wasn't huge when you look at it from an annual basis, but it was an increase. And then we can see this possible move to the upside here for this next year. So given that we're holding support rather nicely on the weekly here, if this holds and it starts breaking to the upside and we get up to that 53K, and then we start moving some of these fibs up, so if it goes up to the 53K, the 38.2% level comes in right at that support. So if this holds, go to 53, come back to 41.2, and then we launch back up to 69K later on. So I like the way the whole structure is going. So really that's what I've been kind of watching, is just watching the timing and make sure all the patterns are staying the same. And so far everything's been holding like that. So right now this looks like a positive year. I mean, I don't know if what will cause it. Will the ETF cause it? Will something else cause it? I don't know. Don't really care. If buying interest comes in, I don't care what the news is, as long as the indicators show what the news is telling me. I'll go with that. So I do like that. The only other thing on here was I had this timing that I looked back a while back for my thresholds, or actually I took it from this point on this break. It went down and made a low prior to the halving, and then it started to go up. But if you take this leg down to this point and then start looking toward the upside here, the 61.8% level comes right in at 53, just above 53 really, but 53.092. So that's still a target off of that trend line break that I've seen on those other time frames. So that's the area I'm kind of looking at on this leg as a minimum. Of course, it could go higher, but if it wants, right now it's working its way up, and then maybe we come back down to that 41K prior to halving, and then go higher from there. I don't know, but everything on timing works really well. So because if you go from the halving back to the low, it's been 17 bars from the halving to the low. So it's just an interesting pattern to where once that happens, there's 18 bars from the halving to the high, and then from the halving to the high puts us at about October end of 2025, which would be much higher. but for 2024, I'm looking at a minimum of 114. I know that's kind of a crazy number to go for a year, but as long as this whole historical pattern's holding, I got to go with it. I mean, I'm not gonna throw out 250,000 or 300K or 500K just to throw out for kicks and giggles. I actually want to put some evidence behind it, and right now we got a lot of good evidence on a lot of different time frames, a lot of different bullish structure being held. So to me, any dips in the market back to that 40K, 41K area, and maybe a little further, it could go down to 39. But if it goes to 39, everybody thinks it's going to be dead and going back to zero. But if it gets down to that 41K, that's going to be an area to watch to do some buying. When you look at the daily, I mean, this is 38.5 for the shallow fib, but the bottom of this is at 39.3 on this zone. So to me, that 41K is nicely in that zone.
Yeah.
And to me, I think there's going to be a lot of buying interest in there. I haven't done any volume analysis, but I feel like that volume is probably pretty heavy, right in that zone. But that's what I'm showing for Bitcoin. So if you have anything on Bitcoin, that'd be great. And maybe you could have something that complements it or goes against it or something.
Yeah, man. Actually, got a couple of things here. Let me put it on here.
Since you look at things differently, I'd like to see if we correlate or not.
Actually, I believe we are. I'm looking still that that's saying that 53 area. So here's the one thing. I posted this chart as a nice clean chart. Just kind of back when we were a few weeks back here talking about this low volume node providing support here. This is the weekly chart. We're coming in sideways between the weekly pivot and the R1. For those of you that have to be very bearish, if we lose support in this area and we really kind of do it impulsively, my thought is, 34, 35,000 here, the weekly pivot, this area is where we're going to find support. You can see we've got the low volume mode below it. So maybe we could even wick down there a little bit. But ultimately, I believe that this weekly pivot should hold this support. But I'm not expecting that to happen at the moment here. So you can note if we jump in here to the daily, you can see now we're holding support.
My shallow fib on my weekly is 36.1. So
right down there.
That works out pretty well on that volume node that you were looking at down below. For sure. Yeah. And, right here, we had this big drop here. Everybody's like, oh my God, it's dead. And then we kind of rocketed back up. But it just hit that low volume node. You expect to get the rejection there. We keep getting it. Right now, you can see that the daily pivot is holding its support. You can see that the pullback recently, was it this morning or whatever, hit the just the EQ of the range here. So I'm still kind of looking at the idea that that we are. Oh gosh, okay. Just making sure you guys can still see me here. You still see me, right? Okay. Yep. My thing here says movie recording stopped on my camera, so I don't know what the heck's going on. But you filming a documentary?
So I'm looking at this potentially as a 1-2 here. You can see I've got this 53,267 target here on the Bitcoin USD chart on Coinbase. So, again, you're looking up there toward 53. That's where I've got my target in there. If we look at another chart that I've been showing here, no, this one. We've got all these. This is the one I've been putting together since June over here and discussing this whole thing as it's been going. I mean, we're still finding support on this ascending channel support, resistance here as support. Again, even on this one, this is the Bitstamp Bitcoin USD chart. So you can see that we just kind of hit the daily pivot here instead of dipping below, but right around the same area. Still looking good. I have an initial, remember my count here is 1, 2, 1, 2. And so that gives us a minimum expected wave 3 of 3 up here at around 52,000. And so, again, 52, 53,000 still looking there. And other than that, I've got, this one right here. So I've talked about this before, and actually had this chart out before with these green blocks on these target areas. But basically, every time, this is the cloud here, the Ichimoku cloud, and we get the big pullback usually when we get around the top of the red cloud. Pull back there, top of the red cloud spiked up, pull back there. So, if we're looking at that again, we're looking up here right around at least 50,000. Green cloud gets you up there around 53, 54,000. So again, still looking at least there. And the other thing about that is, again, that gets us the R1 pivot here on the weekly. So, if we finish out this wave 3 up there, the pullback for wave 4 would be expected to be right around 39.5, 40,000. So it could come short. It could potentially come short right into the sideways here. But, we usually look at the 38.2. By the way, if we go a little bit higher on that, that'll obviously bring that 38.2 up there a little bit more toward the 40,000 area. So again, kind of looking at that whole, 39, 40, 41,000 area for a pullback that you were talking about. I'm looking at the same thing here. They give us a wave 4, and then we get a wave 5 up. But even with that, remember, I'm looking at this as 1, 2, 1, 2. So this is 1, 2, 3, 4, 5 would get us this pullback, you know, up here toward 65,000 or so, 66,000. But that's only going to be this 1, 2, 3. So we'd look for a pullback from that. These just real quick pulls here, so they're not exact. Back to, again, around the 41,000 where we're building this base, right? It's a significant level you were talking about.
Boom. I like it.
Yeah. And then we'd get wave 5 up from that, up there, minimally around 86,200, just off that. Now, all that said, it is possible this could all just be a 1 and then a flat as a 2. And then that gives us a 3 at around 78,000 or something like that. But until this does not follow the expected course here, we'll continue to look at it as a 1, 2 right now, 1, 2, 1, 2, and kind of just making its way through there. So, yeah, I mean, a lot of similarities between what you're looking for as far as targets go and pullbacks and stuff like that. And by the way, this isn't the last target. That's just that movement up right there, that initial movement up for what I'm looking for. So,
yeah, because I marked it as I marked it as key long-term support, and a couple of people asked me why I came about with that. So I explained mine, but you looking at it in a different way, and it's actually working out pretty well, even from a wave structure. I like it. Looks pretty good.
Yeah. So, all right, what else you got there, man?
Of course, there's no guarantees. This doesn't mean it's going to go to 53, but as long as the structure holds, it should, right?
Yeah.
And that's why I follow zones. So once it gets out of the zone, then I'm out, and then we'll go the other direction. But right now, that's what we're kind of looking at. What do you want to go on to next? Anything?
Whatever you got, man. Yeah, you're the one.
I'll just show real quick.
So you let me know.
Yeah, I'll just show the ones I have open, the tabs I have open at the moment.
Sounds good.
ETH is kind of the same kind of look with Bitcoin when it comes to this previous shallow fib from way back when. Kind of working our way up and got into this period of consolidation in here. So even though it went into the bear zone, actually went into the bear zone here, went into the bear zone here, but it really hasn't broken down this 2109 area. We did have a target buy. So when it came back down on that wick, I had an order in there at 2109 because that's where the buy was. While if it dropped, that's where I would want to buy it. So I actually got the buy in there pretty nicely, and now we're back to the upside. But the new target buy is at 2101 on this latest one, but the one from before is right at that shallow fib. So for me, if I would have bought it and it would have kept going, then I would have been stopped out and I would have taken the loss. But we've bounced up so far. But we're still in the bear zone, but it's the same kind of thing. I sold some to reduce exposure, but again, I want to leave some on as long as we're on this, as long as we're above this previous shallow fib. I want to have some exposure to the upside as the structure is still up, sideways, and then possibly a continuation to the up on the 4 hour. Now on the daily, been in the bull zone. Actually went up, came back down, touched the shallow fib, and got filled back again at that 21. I got filled at 2110 because I rounded it up, but it was at 2109.70 was the shallow fib, but 2110 was the fill with the next target at 2953 because this 100% target already hit. So you took profit, came back down, reestablished the long at the shallow fib, and then you take the next one, which comes out to be the fib extension zone between 2880 or 2880 and then 3104. Nice. And that comes from just from this high right here. Basically, if you took this trend line, it's the start of the next trend to the downside. So that fits really nicely in this zone. So that's the area that I would want to take profit. So when you're looking at it from that standpoint, we're back long again with a target of 29.53 on ETH. As long as the bull zone holds and stays, or if it goes into the bear zone, you still have to have 3 settlements under 2109. So you could actually get down toward this 2109, go into the bear zone, but not have 3 consecutive settles. So to me, it won't be a complete break. unless we get the bear zone and 3 consecutive settles under 2109. Then I would get out of my positions on the daily going forward. So that's kind of my stop, the way I stop things. But I do trade a lot of spot. So to me, those stops are a little bit more a little bit easier. Now, if you're on a lot of leverage, you might not want to wait for 3 consecutive settles because that could eat you up. But you just have to establish a different way of stopping things out. But I generally use the zones as my stops. What else I got? Gold. Gold went into the bear zone on the 4-hour back here. I've been out of the 4-hour because we had 3 consecutive settles underneath this previous shallow fib right here. So for me, I'm waiting for a kind of a little bit of more of a correction to the downside before I get back long on the 4-hour, or we get into a new bull zone. If it starts to crank back up, I'll get back long again on a new bull zone if this starts to hit over here. But however, on the dailies went bull zone a while back, and I've been long since. It came back down and retested right at the bottom of the new zone. Didn't break, so it was pretty close, but it started to launch from there. We hit a target, took profit, came back down, and rebought the shallow fib. So I've been underwater for a while. I'm back underwater again because I've bought back in at the shallow fib, waiting for this thing to start cranking back up. But just been kind of holding the. I'm underwater on this one, but from what I made breaking from this move, I'm still on the positive overall for the entire bull zone. But for what I have on at the moment, I'm a little underwater. If I got out of it right now, I'd still be positive from the zone itself. But right now I'm just kind of holding it. ADX is still relatively decent strength for the bulls in the bull zone. So my target for that one's at the trend-based extension at 2203. So that's what I've been waiting since I've already hit the 2144 and it came back. That's that next one. So if it starts to leg up, that 2203 will be my next target to sell there. So hopefully it goes up to that point, comes back down, gets the new shallow fib, and then gets all the way up to 2305 and gets me on that next one. But right now I've just been kind of holding the long, and as long as it wants to stay in the bull zone, I'll hold my longs. So that's where I'm at on that. Anything you want to show on gold or anything before we go on?
Let me check here real quick. Where's my gold?
You mentioned silver too. Let me pull my silver up while you're looking.
Go ahead and pull. You got silver there?
I think so. But you go ahead and look at gold while I look at my silver.
All right, I'm going to pull this up here real quick.
I haven't looked at it lately.
Gold. Yeah, just big picture thing still. Like you said, it's really kind of crazy price action there locally. What's going on there? If we're looking at here, it looks like a 1-2 and then maybe a 1-2 here heading up. With this 1-2, we've got a minimum expected target up here of wave 3 at 2261.5. If this becomes a 1-2 here as well, an interior 1-2, that would get us. What would that get us? That would give us this wave circle 3 overextended up here around 2451, which is about where the wave 5 is anyway. So it's probably 200% here of wave 1. Let's see. Yeah, we're pretty close up there. The 200% of wave 1 is 2378. So yeah, again, we're just looking for this thing to kind of potentially rally up here. If it pulls back below this swing low over here at 1935 and 60 cents, that's 3 waves up then. In that case, I would be looking at this as a ABC, and then we look for 5 waves down, back down toward this swing low here at about 1800 as a flat. So, ABC down, ABC up, and flat. But we have to get below that 1935-60 swing low to lock that in as 3 waves. The other possibility always is that maybe this is a 1, and then this is a flat here for the 2. So it's ABC down, ABC up, and then 1, 2, 3, 4, 5 would get us back down here around 1900, 1930 in that area to finish off wave 2. So, again, it just depends on what's going on here. Do we break out higher or do we break down? If we break down, we look for a wave 2 flat potentially. if we or this larger degree wave 2 flat over there. But either way, it should be up overall. We should be seeing new all-time highs coming out. Things don't ever work on our own schedule, right? So, that's life. That's kind of life the way it is there.
Yeah, I was just trying to update it real quick. I was looking at the 4-hour. 4-hour went into the bear zone right here and has worked its way down, but it hit the target. And since this went actually a little bit into the oversold condition down here before it came back up into the bear, this was a buy here at the 100%. I didn't buy it because I wasn't watching it, but that would be a buy. Now, if you wanted to, you could have sold it at the shallow fib and made that little bit of a trade. But given that we overextended a little bit and then popped up from that point, I would probably hold on to it and wait to see if we get all the way up to another bull zone, and then press the position by adding more to it. But right now that's been the play. We had a nice move down to the 100%, which is a buy, which is right around that previous low. So I do like that position. If you are long there, maybe you put a stop just below it, or if you want to wait a little bit longer, you can hold it a little bit. But the next level would be if it breaks to the downside. This zone right in here between 22.15 and 22.42 could be a spot. I'd have to go back in history here to see if this zone has anything significant. Basically, the bottom of the zone right there on this little low. There's a threshold right there too, just below it. But so basically, if I was looking at this, and I didn't buy there, if it starts to come back down, I'd be buying in this zone instead. But right now, everything's looking good to the point where this could hold pretty well, unless the momentum. I mean, momentum is still with the Bears, but the Bulls are starting to gain a little bit here. Yeah. So I'll be watching this. If this green positive starts to, push up, we'll get some buying interest. And once we get past the 61.8% level here, I think more buying interest will come in and get us into that bull zone. And then from that point, then we're off to the races, because then we're going to be above, trend lines and those kind of things to give us that oomph that we need. But this is a 4-hour versus what you were looking at. Excuse me. But I was a buy on that. I didn't buy it, but I would be long at this point if I was playing it and pressing it on a new bull zone. That's what I'd be doing for silver.
Yeah, I like that. It looks like it came back in and filled that fair value gap there on December 13th, that big candle. And then we've got almost a double bottom down here. Yeah, keep going over there a bit.
Yeah, right here.
Up there, yeah.
Yeah.
So filled in that whole gap there.
Yeah, and that's right where my bull zone started.
Yeah,
Crossover. So if you're looking at this trend line, right here, that was a break.
Nice entry, yeah.
Yeah, and then, I mean, if you wanted to, like I like to do is, you take those. Every time they move this shit all the time, I don't know where everything is. You take the furthest point up to from the break point. So basically, right there.
Yeah.
I mean, if you were playing the break, but you'd have to be on it because it went pretty fast. It seemed like, because it's only a 4-hour, so that was a 4-hour candle. But that right there was the actually pretty nicely on the 38.2 right there. But then once it broke down, that's where this came into play. So if you're playing the short side, you would have shorted it. You would have bought it back. Everything's looking good. I just like that this is holding right here.
Yeah.
And then that's why it would have been a buy right there with a stop below it. But right now, of course, I didn't get in because I wasn't following it. But
we don't get into all of them, right?
You can't. That's why I'm pretty simple. I usually have maybe 5 or 6 things I just put a lot of energy into.
Yeah.
And then every once in a while, I'll throw things out that have really good setups. I don't like to do too much, because then quality goes away because you don't have time to mess with everything. So I kind of keep to 5 or 6 different things, which basically is BTC, ETH, gold, SPY, dollar, things like that. I'll look at those. But then if AVAX or some weird coin has a really nice setup, maybe I'll throw some out there, but it has to be a nice setup. The fibs have to hit right. The zones have to hit right. It has to look good, or I'm not going to just throw money at every little thing, because you're going to lose, and I don't want to lose.
Exactly.
I want to lose 10 out of the 12 things I have because I'm not paying attention.
That's right.
So, but that's where I'm at on that. Speaking of dollar, we can go on that real quick.
Yeah, definitely.
Yeah, we went into the bull zone. I've actually traded this twice. I bought at this time. I actually sold. I bought it right here, and then it went up, and I was thinking, you know what? It doesn't look all that great. I went ahead and got out. Wasn't a threshold theory thing. It was just more of a cash flow thing. But then it came back down right at this point, and then I bought again, and then it actually triggered again recently, last hour or last 4-hour candle. So I bought it and then sold it again. I did not buy the shallow fib because I've been in meetings all morning. So as it came back down, I basically could buy it if I wanted to, but I'll just take the 2 trades on this one. And one of the reasons I'm not super excited about buying it again is because the daily is still in the bear zone. So if you were actually playing this, you would actually be selling and going short at the shallow fib with the downside back down toward that 99.5, because we're still in the bear zone. And as you can see, when this made a high right here, the RSI was at this level, and then it's back up to that level again and not making anywhere near that previous high.
Yeah.
So to me, there's a little bit of I'd want to short it more than I want to buy it. So since I traded the 4-hour twice, I'm like 3 times. I don't know if 3 times is a charm. So I'm just not gonna mess with it. And I'll just watch this, and I'll look for that fib extension target down here. Depending on what things look like, that's probably where I'll end up possibly buying it if it gets down to that range, but we'll see. But right now, shallow fib held, downside still there. The green positive directional index is trying to cross here, so that's something to watch for. But if it ends up going north, it would get a new bull zone, and then that would be a signal to buy. But until then, I don't want to touch it. So that's what I'm looking at on dollar. What do you got on dollar?
Let me see here. Got this right here. I got a bigger picture look at it.
You got a weekly or? Yeah, weekly.
Yeah, it's a weekly here. And what I'm finding compelling right now is we're hitting that weekly pivot and getting rejected there. If I'm counting this on the weekly, it looks like 1, 2, and then 1, 2, 3, 4, 5. So it would give us a 3 and a 4. And if that's a 4, I think we've probably hit the 38.2 retracement, which is our initial wave 4 target. Yeah, right here. We just hit that right around 102.84.
Yep.
We could pull back and break out one more higher to the wave 5 here. Oh, I'm sorry, the 50%, which is 103.61. But I think ultimately this whole, the pivot, this cluster above it, which if you look at this cluster, go left, it's a pretty significant area. I think this holds. So even if it pulls back here and then rallies up again, I think it's just an ABC for a wave 4, and then you get a wave 5. So right now, a wave 5 dropping down here to finish out this first wave down gets us a target of around 98.750. If we hit the 50% area, which I like better because it gets us around 98.3, right? It gets us right around the S1 pivot. And the idea here when you're trading pivots is rejection at this pivot area takes you down to the S1, brings you back up the pivot to get rejected, and then takes you back down again. And so if this becomes one wave down, then that should be a 50% retracement or so right around the pivot, which it is.
Yep.
So you get a 1 and then a 2, and then you'll get 3 coming on down further. So for me, that's what I'm watching as we continue to look here.
Makes sense. I like it.
Yeah.
No, it makes sense because like when you looked at mine, the shallow fib is at 102.86, and my 61.8% level is at 104.25. So I could actually see it going up to the 61.8% level, but if it does go into the bull zone, it has to have 3 settles above the shallow fib, which is at 102.89. So I could see it going up to that level and then coming back down and start trading back below that shallow fib. So a wick up into that the 103 area that you're looking at, or even all the way up to 104, and then it comes back down. It even though it went above the shallow fib, it's not breaking into a bull zone without the 3 consecutive settles, and this is a daily, so it would take 3 days to do it. So I'm with you. I could see it coming up to that point, and then starting to come back down. Where my target's 99.5, you're just underneath it a little bit at 98.50.
Yeah.
If it gets all the way up to that 103 or whatever, you said it was even a little further lower at the 50% level.
Yeah.
I like it. It looks cool, and it matches up with the thresholds that I have, which is nice.
Yeah.
So
I mean, it works for me, man.
Yeah, I like it.
Yep.
I like it a lot.
What you got there?
Oh, the only other thing I have open at the moment is SPY. This one went into the bear zone, and same kind of thing as the BTC and the ETH. It went into the bear zone, but we're not even close to the previous shallow fib. So, like, this is the line in the sand. I haven't been playing the short side on this for the 4 hour, but it's been working its way to the downside, came back up, hit the shallow fib. But right now, I'm not looking to buy the 4 hour unless this thing crashes all the way down to the previous shallow fib at 4,600 or so. So I've been kind of out for that. If this would have went down into overdone, oversold, and got down into here and came back up in, maybe I would have thrown out there maybe a little bit of a long. But I've been kind of sitting on the sidelines for this one, as I'm just going to respect the bear zone, see if we get a little bit further down. But when you look at the daily, I really was hoping to hit this shallow fib at 46.80, because we went up to this point. I still have that trend line target, which matches the 200% at 49.13. We're still in the bull zone. The bears are starting to get a little bit of a indication here. Which it should, since we've been down, the last few days.
You're right.
Down.
It's been an awful year.
Awful. Yeah, exactly. But right now, the top of this zone is my shallow fib off this latest. So if it gets to 46.80, I'll buy it with a target of 49.11. So I'm still kind of playing that. I don't know if I had any shorts on. Yeah, I don't have any longs. I don't have anything on for SPY at the moment because I don't know why, to be honest. Maybe I missed something. But my buy is at 46.80 with a 49.11. Now we could actually get down into this zone in here and still be in the bull zone. So look for some more downside before heading higher. But I could be wrong. We could miss it and start heading higher, and I'll miss out. But I typically would be long on this because I don't know. I have to go back and look on why it's not there. Maybe I took profit for cash flow and waited on something, but that's where I'm at on SPY. Still a little bit further downside potential, but still bullish structure overall.
Yeah, basically just a pullback.
Yeah. Do you got what do you got on SPY? Do you have anything?
Yeah, real quick here. I mean, where we're getting caught here is the daily pivot. And so my thought is if we break down through that daily pivot, S1 pivot down here around 46.32 at least, and that gets us around this gap. So we could fill that in down here around 45.89.5 if we were to get that. But ultimately, it just ends up being a pullback, it looks like, before further upside. So, and obviously, if we're going from here, again, we've got, you'd have this first initial target at the R1 pivot there on the daily, which is right around 49.25.5. On the weekly, the weekly looks awful. Bearish engulfing candle coming in, but you're not really getting a lot of volume. You're getting just a little bit more volume than you had at the top. But this entire rally has a ton more volume. So it's not like it's exceptional volume coming in. And if we're kind of looking left here, you can see that it's this previous resistance where it's finding support at the moment. But again, it could continue to fall on down here. 44.9850 gets us the weekly pivot. What was this? 44.9850 would get us back down here. Yeah, so I would look, again, at the S1 pivot. If we continue going through that, I would look at the pivot here right around 44.98 to 45.20 or so, kind of in that area is where I'd be looking for potential to get. But if we're getting down there, the odds are we then rocket back up. And, again, not just on the daily, but here on the weekly, you start looking up here toward this R1 pivot easily, which is 51.70. So, yeah, that's what, right now, just kind of seeing, do we get further pullback or do we actually catch some support here at the daily pivot and rally back up from here? It's kind of where I'm at with that.
Yeah, and that's probably why I'm sitting a little bit more on the sidelines, just waiting for some more downside opportunity. But like I said, it could be wrong, and it could hold support here, like you're showing, which was off that previous resistance. It could pop from here, and then I'll miss out. But right now, with the weekly looking as ominous as it is, not that it can't rally, but if it does end up crashing a little bit more. I want to take advantage of that downside opportunity. So I've been kind of sitting sidelines waiting for some more downside action before I get back into that ball game.
Yeah. Just a reminder, guys, that you don't have to take a trade just because it's there. Look for something that really kind of pops out at you and that really looks serious. Find, a higher confidence trade. Find, not something that just has one reason to get in. Look for a few different reasons that kind of coming together, having confluence in that same area. If you do that, you're less likely to make as many bad decisions as you've been making, and you're more likely that when you do make the decision, it's going to be right. So you kind of your capital account kind of reflects positivity twice in that less drawdown and more potential profit more often coming through rather than what you were doing before. I think one of the big things with traders is they come in and they think they have to be in the market all the time, all day, every day. Oh my God, if I'm not in the market, I'm missing out. But that exact kind of thinking is why you guys will notice that you end up losing a lot because you're taking trades that on a whim look like it might be okay. There was a chance, but that's all it was. It was just a chance. And the one thing I've noticed over the last almost 30 years of trading is most people that are out there trading and talking about their systems are just generally, they're gambling. Their systems are gambling. It's not even good gambling. That's the problem. Like Fibbo's got a great system that works well. If you understand it, it works well. What I do works extremely well as well. But a lot of because neither one of those are about gambling. They're all about, listen, we're looking at structure and price action and things that normally happen around these places, multiple things. Like Fibbo's not like, hey, listen, it gets to that zone and that's it. He's like, it gets to the zone there, it's in the bear zone here. And, so there's multiple things coming in, which is why it tends to work more than not. And so I just think, guys, if you're out there learning, try to trade and whatever, don't be jumping in just because there's a chance. Get used to start looking for higher confidence trade entries, which just mean there's more things happening at the same time that suggest that you're more likely wrong than you're not, or more likely you're right than you're wrong. And I think you just end up having a lot of better result, because that's what you're looking for, right, guys? Listen, real quick here. I know Fibbo's got to go. I just want to say this, guys. Listen, becoming a profitable trader is about consistency. It's about consistently applying your system. It's about, not going off on a whim, not saying, oh, well, this time. Don't do that. Stick to your rules. It's about consistently locking in profits. Listen to what Fibbo's saying here on his system. He's like, well, I took profit there. Maybe I'll miss this next part. But, the thing is, his account keeps going up because he continually takes profit along the way. He's not trying to turn $100 into $1 million in the next 3 hours. Okay? He's sticking to things that are liquid. He's sticking to things that have a lot of interest. Bitcoin, ETH, gold, SPY. The ES minis for the SPY, right? For the S&P. It's the most liquid futures contract in the world. Okay, so there's reasons we do this. We've been around 20, 30 years. There's reasons why we trade this way. But you'll notice it's different than most people that just come in, especially in crypto. They're all looking for that micro cap piece of junk that they can just throw $5 into and it'll make them wealthy beyond compare. It'll buy them 5 Epstein Islands in the next year, right? I mean, it's you guys got to understand, if that's the way you're looking at it, you're not going to get where you want to get. So take it from a couple old guys that have been doing this a really long time. Stick to things that are more liquid, stick to things that have history. Otherwise, you're really just kind of gambling, and that isn't trading. Don't throw money in and say, "Oh, I'm a trader," when you're just gambling. So,
Yeah,
you got any last words there, Fibbo?
Yeah, well, I mean, one of the things to me, not doing something is a position, and people don't understand that sometimes. Being flat is a decision, is a position. You might not be in it at that point in time, but making that decision is making a position. And then depending on your portfolio, you could have natural hedges going on versus what you have going on, and all that kind of thing. But to me, if I decide not to do something, just because I usually follow it and the threshold theory is clicking, sometimes it just, you have enough going on that you don't have time to mess with it, that kind of thing. So, but I also tell other people is, and everybody's has heard this many times, don't get married to a position. If it's time to take profit, just take profit. There's always another opportunity. I mean, there's always going to be multiple opportunities. So to me, I don't ever get married to something. If I get out of something and it goes up another 10%, it sucks. I could have made more, but who cares? I made something, and my equity statement that I get is more positive than it was before. And that, so to me, I try to preach that more than anything is, if it's time to take profit, just do it. Don't worry about 100x, all this other stuff. And if you like you said, consistently, if you consistently do that, you'll build confidence. Your whole mood will change. And like you said, life is just like trading. If you come into it all pissed off and, man, I gotta make $1,000 this week somehow, and you just keep throwing shit around, and the next thing you know, you're down 1,000, and now you gotta make 2,000 the next week. So so you gotta come in with the right mindset, that stick to the plan. If the plan says to take profit, take it. It's really that simple. And if it rallies up, and then you got 10 people that go, well, you should have held it, you could have got another 10%. Well, the coulda, shoulda, wouldas is a very bad disease to have when you're when you're trading. But that's all I got. I mean, you covered it, and hopefully this is good. But unfortunately, I got to run.
Yeah.
But you can stay on and show some other charts.
Can I really? I appreciate that, man.
So I'll take off. Thanks for everything, but I got a 1 o'clock, so I got to run.
I appreciate it, man. Catch you.
All right.
Take
Peace
care.
out. Later, all.
All right, guys. So some great advice from Fibbo there. I've got a few more charts that are different than what we usually look at here. I'm going to show you. But yeah, I know you guys are here looking at charts and want to know what our thoughts are and whatever. But at the end of the day, this kind of stuff that we're talking about, this stuff actually will make a greater difference to your survivability as a trader, and to even your profitability as a trader. There's a reason why most people out there are just showing you, their system and saying, listen, this is what you have to do, follow these steps, rather than talking about all the emotional and the psychological stuff. And it's because they don't know how to talk about that other stuff. They're just trying to get your money. It is what it is. But, if you're coming in with me, you're coming in with Fibbo, you're going to get a lot more where we're talking about these types of things. With me especially, it's a big thing. The emotional and the psychological side of what's going on is really important. Risk management, really important. If you're not willing to do those things, there's no use, looking at the rest of what I teach, because you're just going to do the same thing you've done already with what you've already done, right? So, yeah. Let me see here. Glad you guys enjoyed that with Fibbo. Let me see here. Andrew says, what'd you say there, Andrew? I love taking 10 small winning trades. Yeah, and it does, guys, real quick here. What you'll notice is psychologically, even if it's a small win, having a win is a big psychological boost. It adds to your confidence. It doesn't have to be a huge win. And when you're locking in small wins consistently, it really fills you up with a lot of confidence, which means you trust in yourself a lot more, and you continue doing the right things the way you need to do them, and you don't get shook out on emotions as much. So it's something really, really important to understand. Let me jump in here for, oh, geez, let me jump in here to a few charts real quick, guys. What I want to talk about, TLT, I talked about this one before, right? So we finally got the bottom. I talked about how we were getting that large reversal candle back in November. We had bullish divergence. This is the monthly chart, guys. Bullish divergence. Look at the damn volume down. Look at this capitulation volume at the low here. And look at how much more volume right here than there was in the previous candle, which was bigger, right? Look at how much bigger that candle body is than this one. But there was a ton more volume coming in this one. So what does that tell you? It tells you demand stepping up and saying, F you to supply, right? And what happens after it? Bullish engulfing, large reversals candle here coming up, breaks out impulsively. Again, another big volume through the wedge resistance. And here we are now pushing out through that monthly pivot right there. And so it's been a great move out. The expectations we're going to, is that this descending movement is over with. And we're coming out there. All right. So that's what we're looking there. I've talked about this one more than enough times here. This has this huge, gosh, what was this? 553 days of accumulation here. We had a very, very small wick over here. So it's a bullish SFP and a spring in terms of Wyckoff. Then we gapped up. It was almost a bullish engulfing candle, but because it gapped up, it didn't quite fill in that candle there. But huge candle there. Continued up here. We rallied up into this supply structure here, rejected, pulled back here to the weekly pivot. I think we're going to pop out higher. It looks to me like we got a 1, 2, 3, 4. We got a 5. 5 should take us to the R1 pivot there. So we'll go like 1, 2, 3, 4, 5. And then we should get a wave 2 pullback toward the pivot. And then we should get a reversal around that pivot. That's the general expectation. We'll head up higher. So we'll probably pop out a bit higher here, maybe around this EQ of this range here. So a little bit higher here. Like that. Again, that pullback for wave 2, 50% right here around that pivot, right? There you go. And then doing that should then give us a long here. And by the way, these are the E-minis for the Russell 2000, okay? If you guys didn't know. That'll give you a minimum expected wave 3 up here at 3152. Wave 4 expected pullback maybe around 2600. Wave 5 minimum expected 3548, almost 3549. Dude, there's your play. Your small caps are in play, I think, for this year coming up. So it looks great. I think we're really doing good on this. We're getting that rotation from the Magnificent Seven into these small caps, which again we're side. Almost almost 2 years, getting on to 2 years, a year and 3/4, something like that. A lot of sideways here from June of 22, all the way across, right? Sol, my chart here from Sol. You guys still trading Sol out there? Remember this chart? Remember this? Did anybody actually see me do this back on the Windy O show? Anybody up there? So we've had a great move up there from about, it was about $9 or so, where I was saying it was a good buy. And then I said, 15 gives us 15 will give us 30. And as we were getting near 30, I said 55, and then I just kept upping it as we moved. But here we are now. I believe we're on 3 and 4 of 5, 3 right now. So if this low is in, again, daily pivot holding this support right now. If wave 4 is complete here, wave 5's got a minimum expected target 160 or so. And so once again, that would be of 3. So we'd have a 4 pullback and then a 5 up higher, probably up to 200 some change coming on that if we can get that. Okay. So yeah, Sol still looking. This is a clean chart, guys. This is a beautiful chart. It's easy to trade. Yeah, I mean, if you know what you're doing, right? I mean, of course, I've got experience in talking about, but if you're new, you may go, "How's that easy to trade?" Right? But it's a lot of real clear movement in it, which I love, and just really kind of gets this whole thing going here. The other one we had was Link, and this is the one where I was talking about how this was accumulation. And as we were pulling back here, I said we'd probably get a spring or a test down there. Probably buy at about $5 or $5.50. What did we get down to? $4.92 basically. It looks like. Yeah, it looks like we're down about $4.92. So it's pretty spot on with that. I said you definitely want to be buying there. It'll just be a spring, and we'll, that'll be the low of the accumulation. We'll rally up, and of course, that's what we've done here. We're going sideways right here since about November. Yeah, just about 2 months now, and sideways, right? Volume dropping off significantly. We had a little bit of volume coming in here at the top, which is sending us back down. So we could see it dip a little bit lower here, maybe swing below the 1286 area. But looking for this, if we can hold here, looking for this to rally up here, probably at least, at least 21, but probably closer to 23 or $24 on this initial movement up. And then we just have a pullback, and then we continue up higher. So we just kind of finish out this first wave up here is what I'd be looking for on that. Yeah, I think maybe we got like a 1, 2, 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, maybe a 5 here. 1, 2, 3, and then a flat maybe. ABC, ABC. 1, 2, 3, 4, 5. Like I said, come down a bit lower here, and then turn around and head up. If we do that, if we get kind of down there, yeah, it's about 21.87 or so on that target, depending on where this pulls back to right here. But if we are breaking back out impulsively above the daily pivot, this is the 3-day. We can jump to the daily, same pivot there. If we're pulling up impulsively through that, we should go ahead and be looking for that higher high there. And right here, you can see that our target area is kind of getting us up here into the R4, R5 pivot area, which is what we would generally expect running through those R pivots. So right now, we'll see if we get one more push lower here, maybe. Swing it down below the low here. And then, head back up there. But we're looking for the impulsive breakout above the daily pivot here at, what is that, right around $15.41 or so. And if you can get that, you should probably be going long then toward those target areas there. Let me see here. So these have been good calls that we've had here, good things that we've done. I've done these publicly. What else we got here? No, I guess that's pretty much the ones I wanted to show you guys what we had. We got the Qs here. Qs, I have a wave 3 target sitting just a bit higher. We do have bullish divergence kind of showing up here, or hidden bullish divergence. We could see this continuing to pull back to the S1 pivot right around 390 or so. And then what we want to see is, whether it's from there or where we're at, we want to see an impulsive breakout above the daily pivot right there around 401. If we can get that, we should be breaking out higher. If we get to the S1 pivot, 426 would be the target there on that. But again, it would just be wave 3. 1, 2 will be 3. We'll pull back for 4, and then we'll go 5 up. So, yeah, that's what we'd be looking at there. Let me see here. Other than that, we've got GBTC was the other one that I talked about down here as a buy back here in November of 2022 when we were down here at the lows at $7 and some change. That was the point which everybody was like, oh my God, no, they're going to liquidate because remember they had the whole fallout from the lending and whatnot. And so the thought was, oh my God, they're going to have to unleash all this Bitcoin onto the market. It was going to go down. Sentiment was extremely bottomed out, terrible, awful. And that's when I was telling you guys there on Twitter or X or whatever, and here on the stream, that's probably the low there, that's probably the low end, and we'll buy and head up higher. And it's, as you can see, we've done nothing but potentially looking up here toward $57. My wave 3 up here is about $77 up here. This wave parentheses 3 target. We'll see how this continues to play out here, but so far continues to look good. I think that NAV is, the gap is closed to like something like 5% or something now, right? So let me see here. I don't know where you can buy TLT for USDT. I honestly don't. That's a TLT being a ETF. So I don't know if there's actually any place you can buy with crypto or stable coins or anything like that. So, yeah, so that's going to do it, guys. That'll get it there. I'm going to go ahead and cut this short. I think we're about done here. Other than that, I mean, really Ethereum, all we're doing is we're getting a lot of back and forth between supply and demand here. That resistance still holding its support here. If we do break down, the weekly pivot is right here at about 1980 or so. I'd look for it to target that area. And then I'd look for a reversal off that heading up. If we break out from here, I'd immediately look for it to target there at the R1 pivot around 27.58. I do have a 33.14 target along the way, but really 1, 2, 1, 2. And so this 3 of 3 targets up here around 46.26. I don't see anything keeping us from getting there at the moment. So, that's what we'll be looking for. I don't think this is a leading diagonal here. Again, I still don't think that. We talked about the possibility maybe like a 1, 2, 3, 4, and a 5 here. If it was, you'd have a pullback at least to this pivot here and potentially down here around the S1 pivot at 1500. So if you're losing this pivot here at 1980, 1970 or so impulsively, you're probably coming down to this S1 pivot right around 1500. But man, oh man, you should be looking to buy there. That'll say this is a leading diagonal. And if this is a leading diagonal, the drop should be pretty significant. It should be a sharp, but not that it has to go from here down to here all in one move, but you shouldn't see a lot of meandering sideways. It should look sharper like this, kind of coming down to it. Because that's usually when you have a diagonal and it ends, the reaction out of it is usually pretty sharp. Okay? Because you have all that consolidation coming, and that consolidation is finally released. So you have a sharp move out of that, in the opposite direction out of that. So, yeah, I would look at that for sure. But anyway, that's going to be it, guys. I'm going to get out of here. If you're in the mentor program, we'll see you guys here in about an hour and 15 minutes. Just going to talk about today, really just going to kind of get you guys set up on some of the things I'm adding to the program over this next year. The new coach that's coming in to help us out as well. You're going to love her. And a few other things. So it won't be the entire hour. And then next week, we'll really kind of kick back into it. Other than that, man, listen, guys, join us. Members.texaswestcapital.com. Our group coaching program is second to none. I'm going to tell you that right now. And I know you're like, oh, you got to say that because, you're trying to sell it. Well, yeah, I'm trying to sell it, but it's true. It's true. The hot takes alone, our hot takes are just basically some of the best crypto and stock setups, longer term swing trades or even positional trades that could last a year or more. And these things tend to pay your subscription. Just one usually tends to pay the subscription, depending on how much money you're coming in, of course. But there's multiples. I just put one huge crypto one in yesterday. I've got 2, potentially 3 stocks right now I'm about to put in maybe this weekend, maybe the beginning of next week, that are like, we're talking about macro bottoms with those stock ones. Just huge potential returns on that. So, I mean, people are like, oh, you got to pay that and get in. Why don't you do it for free? Because the truth is, if I did it for free, you wouldn't take it seriously. The second thing is I put a lot of years and money into learning my craft, guys. And so, I'm going to get a return on that. It is. And, you can choose to be stubborn and say, oh, I'm never going to pay somebody. And you might be able to be successful. You might. I'm not saying you can't. But I'm going to tell you right now, I put a lot of money into coaches and mentors on my way up because when I did it the first time, I saw the return. I said, holy crap. So much more, so much quicker than what I was doing on my own prior to that. And so now I do that and I give that potential to people as well. So join us over. We'd love to have you in. We had quite a few new people joining over the last few weeks, last month or so. Love that. As always, remember the only thing you control in the market is how much you lose. That's it. So keep on working on that risk management more than you do anything else. I've been doing this 28 years now. Still the one thing that I work on more than anything else day in and day out. And I do just about every day, guys, because every penny that you can not lose through proper risk management is worth exponentially more in your capital account due to less money you have to make over the course of your trades and the more money you're likely to make on the trades that you do that are profitable. So, all right. Anyway, there you go, guys. Hey, listen, appreciate you guys joining in. And I guess I will see you guys next Friday, right? Y'all take care.